1/5 of global oil exports come from Saudi Arabia. And what happens in the kingdom can have repercussions on international markets. Saudi blames Iran for a thwarted rocket attack on its capital over the weekend. That sparked a war of words between Riyadh and Tehran. This was followed by several high-profile arrests, including princes and other Saudi officials on corruption charges. And analysts say that's left investors very nervous.
The detainees are a huge number of the investors and princes in the Saudi Arabian kingdom. This will create a difficult atmosphere and panic and disorder in the Saudi Arabian kingdom, and this will be reflected in the economy and the financial situation. So in the coming weeks, the situation will be disturbed. The arrest of a great businessman and investor like Al-Walid bin Talal has repercussions on the stock exchange in Saudi Arabia and outside it.
Since then, Brent crude prices have risen by more than $2 in 2 days, surging beyond $64 per barrel. OPEC member countries and other major oil producers have been tightening the taps on their oil wells, limiting the growth in supply. That's put prices on an upward trajectory since a year low of $45 a barrel back in June. And most of these countries have already agreed to extend the output freeze.
There isn't any reason to change what is a winning formula. So I think there's a good consensus building up that we should. Now whether everybody is willing to do it for the entire part of next year, which is like a 12-month extension as it were, it's up on the table. But there is a consensus to extend. The issue will be the duration. We'll be looking to see a number that enables us also to contribute, especially if it's a 12-month period as opposed to a short-term period. But certainly not a number that handicaps us greatly as a country, given all the difficulties we've had. So tolerate the cuts and yet be able to survive as a nation.
But the political tensions between major oil producers could cause fissures in this agreement even before it's put to vote later this month. Mobin Nasir, TRT World.
Let's go to Dubai next, and joining me from there is Robin Mills. He's the CEO of research firm Qamar Energy. Great to have you on Money Talks again, Robin. Tell us a little bit about the reaction to the news we've been having out of Saudi Arabia and the purge of the princes and ministers in Saudi Arabia. What's been the reaction where you are?
Well, I think the reaction from ordinary Saudis has been broadly supportive. They see this as a move against corruption and against individuals who in some cases have been accused of inflating invoices and contracts and other financial crimes. And, you know, at a time of the kingdom is going through some economic difficulties, obviously with the lower oil price and cuts in spending, it is a way of showing that that at least some of the senior figures are supposed to be sharing the pain as well. So I think it's in that sense it's become broadly welcomed on the street. Of course, there are obviously concerns in the business community about what this means for big business in the kingdom.
So how much of the increase that we've seen in prices do you put down to this fundamental rebalancing between supply and demand that we've been seeing for the last couple of months? And how much of it is due to a rise in the political risk premium attached to the region?
I don't think much of it, if any, is due to the recent Saudi events. If you look at the sharp jump in prices, that was more on Friday, which was, of course, before all these arrests were announced. Now, there have been some other geopolitical events, and particularly the situation in Iraq and with Kurdistan and the independence referendum there and with Kurdish supplies being reduced. So that definitely had an impact going back a few weeks. I don't think the recent Saudi events have had any impact really on the oil market yet. What we've seen is just that the oil market has tightened quite a bit because of the OPEC cuts, which after a very long time have finally started to have an impact on the supply-demand balance. And that's been helped by very strong demand. We've seen strong demand in not only in the usual suspects, China and India, but European demand has been pretty strong. US demand has been strong. Global economy has been picking up. And that's really helped and tighten the supply-demand balance significantly, at least for now.
Right. Interesting you say that, though. Let's talk about this new OPEC report, which has just come out. OPEC is saying that, yes, demand is growing, and it sees it continuing to grow, but it sees the rate of that demand growth slowing as we get towards 2022. Is that borne out by your research, or is that counter to what you're seeing?
Well, I think inevitably the higher oil prices, we're up from a low in the 40s up to now, almost $65 a barrel. Inevitably, that's going to slow down demand. Not immediately, perhaps, but given a few months, that will slow demand. So that is going to take some of the edge off this rally. Now, if we go a little bit longer out to 2022, I think it depends on your view on the global economy. But we have had quite a strong economic recovery. But difficult to see that continuing with such strength out for another 4 years.
Okay.
There's a likelihood that there will be a slowdown at some point in that period.
Okay. All right. Robin Mills, Qamar Energy in Dubai, thank you very much indeed.